AMD no longer stands for Advanced Money Destroyer. I'm now calling it Advanced Money Dispenser, as the stock is up 26% on the OpenAI partnership. It has not been an easy journey to hold the stock. It's been a dramatic journey and a lot of doubts and a lot of people making fun of us, NVIDIA shareholders. But it's been rewarding so far, and congratulations to everyone that held AMD so far. Based on my last video, I gave my price target of $370 per share. And in this video, I'm going to update it up to $500 per share after the partnership with OpenAI. I'm going to give you the details and tell you how I got this price target. So I really hope you enjoy it as always. But the OpenAI partnership is pretty much a game changer. It's a multi-year deal with OpenAI to supply them with the AI chips, and it could generate tens of billions of dollars of annual revenues for AMD. Now, just to give you some context, because the current annual revenue for AMD is 33 billion, and this deal alone could generate tens of billions of dollars in annual revenue. So this is really a major deal, major announcement for a company like AMD. Now, the agreement covers the deployment of 6 gigawatts of the AMD's upcoming MI450 chips starting in 2026, with revenue recognition beginning next year. AMD says the partnership can contribute over $100 billion in new revenue over 4 years. And again, the current revenue of AMD is $33 billion. So the partnership is pretty much a game changer for the company. But to dig into the details a little bit, OpenAI will get warrants from AMD to buy up to 10% of AMD at 1 penny per share. So they're pretty much getting the shares for free, linked to price milestones for AMD, with the last tranche of those shares being exercised at $600 per share. So AMD has to reach $600 per share, which is more than a triple from today's price, for OpenAI to be able to buy up to 10% of AMD at 1 cent or 1 penny per share. Now, I'm not a big fan of the 10% dilution, but AMD did it for a few reasons. One of them was to attract OpenAI into the partnership. The second one is to secure OpenAI for the long term. So if you think about it, if OpenAI has a stake in AMD, they have a vested interest in AMD, they are invested in AMD, and they will likely hold those shares in AMD, they will more likely to order from AMD than order from NVIDIA or order from AVGO or order from another chip supplier. So that would make OpenAI AMD's top partner for a very long time, because they have a stake in AMD, they have skin in the game, and that could be, again, a game changer for the company. I'm not a big fan of the 10% and for 1 cent per share, so a lot of the $100 billion in revenues, some of it will get diluted away in the market cap as shares outstanding will explode. But if the stock is trading at $600 per share, I don't think many people would be complaining about a 10% dilution if the stock is 200% higher. So I believe it was a smart move, and you could say it's a little bit of a desperate move, but AMD at least is catching up, and they're proving everyone wrong that has doubted the CEO and that has doubted the company. But AMD has many different tailwinds coming up into 2026 up to 2030. One of them, which I have been talking about so many times, is inference and inferencing in general. Over the last 5 to 7 years, we were mainly in the training phase of AI. We were training those AI models, and now is the time to apply this capability into real-life applications, which is where inferencing comes in. NVIDIA was an early leader in training. They optimized their chips for training purposes. AMD was optimizing their chips for inferencing purposes, which is why OpenAI and Microsoft and Meta and many companies are using the AMD chips for inferencing, not just because they're cheaper, but they're also optimized for inferencing capabilities, much more than NVIDIA chips, which were mostly optimized for training capabilities. So this is a major tailwind, a major megatrend that AMD is leading and is riding it and is catching up fast, and I'm very happy to see it. Something else that could be a tailwind for AMD starting in 2026 is mainly on a comp basis, so year-on-year basis. It's going to be very easy to beat the 3 quarters of declining data center revenue, which was mainly due to chip exports to China, and that will be easier on a comp basis year on year versus quarter on quarter, like what's been happening. So this is another major tailwind that could be much better in 2026, and there's a lot of things to be excited about with AMD. Now AMD is trading at 41 times forward earnings, and that's excluding the OpenAI revenues, 41 times forward earnings. That might sound extremely overvalued, but you have to take into consideration that the company is expected to grow 54% next year, excluding the OpenAI partnership, 24% the year after, and 25% the year after that. So if you're paying 41 times and the stock is or the company is expected to grow 54% in earnings per share, you're paying less than one times price to earnings growth, which is normally extremely undervalued for any growth company in the stock market, especially if this growth is sustainable, which is why many analysts have been catching up and they upgraded AMD to $300 per share after downgrading the stock and calling it dead, losing competition to Nvidia. The stock is dead, the story is over. Well, now this is clearly changing. Now, based on my last analysis, and I told you guys my price target was $364 5 years from now, and I used 48% earnings per share growth for 2026, then 20%, 20%, 20%, 20%, which I believed it was fair. If we look at the current analyst estimates, and we can look at them here, they're expecting 54%, then 25%, 25%, a little bit higher than what I was putting. Now, for my estimates, this is what I used. I took the 54% and I added around 16% on top of it for OpenAI, which would be a 70% earnings per share increase. It might end up being too low, but if AMD was expected to grow 54% without OpenAI, with OpenAI, they should at least grow 70%. I know many of you might claim that this is too optimistic, but if you look at Nvidia's history, when it was much smaller, when it was growing, in its early stages, kind of like AMD, you could say, it was growing 70, 77% for many years in a row, even 200%, 130% this year. And if Nvidia did it when it was a younger company, I don't see why AMD cannot grow 70% in 2026. Then instead of 25%, I put in 35%, then 30, 25, and 20. I believe this is achievable. The current PE is 41 times. I believe, again, it's a little bit too high, and I'm more comfortable using the average, which is around 33 PE or 30 PE, I think is more fair. So I used 30 PE. The current share price is $208. Using those estimates, I would get $531 per share, or 156% on the upside, or 20% CAGR over the next 5 years with a company like AMD after AMD is up 26% on the day. So I believe the story of AMD is not over. I think the story is only getting started. I had some call options I told you on AMD. They were up 293% today. So I had to take some profits on them, and I will likely enter again with a smaller percentage and leave it for the long term. But this is what I did with AMD. I still see an amazing opportunity over the next 5 years. And that was my update on AMD. It was not financial advice. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.